Good afternoon, guys. Welcome back to the channel. Today is the 1st of March 2017, and we're going to go through some very interesting articles in how things in the Bitcoin arena seem to be tapering towards a certain future event. And obviously we have lots of indications through Webbot reports, through lead analysts, and just general momentum of the people inside of this arena. So this does affect gold and silver because I'm going to be discussing those briefly as well. But this is obviously an important aspect that I think people need to spend the time in learning and seeing the developments that take place and understanding why it's important to get to grips with what is actually happening here and now inside of this transitional phase with this new technology, this new currency, with this new asset class, and why it's important to add that diversification aspect to the portfolio. And that's why we can talk about gold and silver all the time, but there's only so much you can actually say before you start repeating it. And we all know the extreme protection and benefits physical metals hold. But what I'm trying to do, and by spending some time in researching and going through what this breakthrough form is all about, and trying to relay it in simple forms for just the average type of people to understand, because a lot of the deep technical aspects are not of vital importance and can be quite discouraging for new investors and people that aren't quite tech savvy, myself also included. So as we can see in this chart here, this isn't so much a price update video. This is going to be more of an educational type video. So with that said, I'm just going to quickly highlight a couple of points that are currently occurring, because obviously Bitcoin took a small tracement back a few days ago, dropping down to about the 1150 mark in US dollar terms. And obviously gold had a slight rally, which, as per US dollar terms, has again come back down via whatever means takes these markets down. So something of interest, which I'm going to point just briefly, is the US dollar trading range for gold is at roughly $1,240 as of this recording, at 244 on the 1st of March 2017 in the UK. And obviously that means it's roughly within a $20 range of being at so-called parity with gold, if you're classing the two equations as being one whole Bitcoin versus one spot ounce of gold. And bear in mind, both of these numbers are actually spot values, because you have premiums on top of both of these if you want to acquire the physical form, albeit the Bitcoin isn't physical, it's a digital deposit inside of your personal wallets. So while we're on the gold and silver subjects, I will briefly just hit on a small update which is of interest note, because silver is actually trading higher than gold in percentage growth terms for the last couple of days. In other words, gold is taking more of a hit than silver. Silver is being more resilient to what is the pressures that are being applied to the silver markets. I mean, we can see there's been multiple breaks where it's been trying to rally out and then been suppressed and suppressed and suppressed. No change there. But if we go over to the UK markets, and we can see the same sort of story happening with the gold, but to the contrary, the UK spot price in silver is breaking clear of the suppressions that are taking place via the US dollar. So if we just flip between the two, you can see exactly what I'm talking about here. So silver is definitely being very resilient in the UK market and is continuing its overall monthly, yearly gains, which is actually very positive for anybody in the UK holding physical silver. So that's the silver update done, guys, and the gold updates, guys. So the rest of this video is going to be entirely about Bitcoin. And from time to time, guys, I'm going to try and do a little bit of cross-referencing. And guys, this is just the weekly chart of what has happened in the Bitcoin markets. And as I stated earlier, it dropped down to about the 1150 mark after it rallied to its all-time high at about 1200. And now it's weathered through that and is back on a rise and is floating in between the sort of the 1220 area, and it's actually jumped $20 in the day today, which tells you that the whole situation between the gold parity headlines hitting are very close and could actually be imminently about to hit. I mean, not that that actually means anything in the general terms of what the values are and what our perceived perception is. All it is an amazing headline that is going to be rolled across, quite likely, the mainstream papers as well. So that is the difference between making something mainstream, and what that actually does is it brings both the Bitcoin and gold into the headlines. So that is actually very bullish for both asset classes. And believe it or not, yes, they are both asset classes. So in terms of UK pounds to Bitcoins, we are very close to the first time ever of reaching £1,000 per Bitcoin. And obviously, guys, that is no small amount. That means it is a serious contender and holds serious value in the marketplace. Right, so we're going to get into a couple of articles here because I'd like to go through the reasons of why this is going to be a sustained market with more longer term stability with future increases. But to get to the stage of not just calling out numbers and higher numbers, you have to be able to understand why these numbers are being anticipated, which takes a bit of time to go through some documents, get some understanding behind it, and be told in a way which is informative and not just trying to give you a hard or soft sell. Now, to me, I don't really care if you buy or sell Bitcoin. I'm only providing this information because I find it useful, I find it very informative, and I believe that's going to help other people. If you believe that's the case, then carry on watching. If you don't agree with what Bitcoin is, carry on watching, because you might find out something new that you don't know. So this first article from Cointelegraph, titled Bitcoin Price Between 2000 and 3000 by the End of 2017, Technical Analysis. So again, people can call out whatever numbers they want, but if there's no substance and rational backing for why that's going to take place, it's just like a hot air balloon. So anyway, Bitcoin price has experienced a lot of volatility since the beginning of 2017. This is as a result of the combination of increased rate of adoption and the actions of governments in an attempt to regulate the Bitcoin environment. The China effect. China has seen a lot of activities surrounding its peculiar Bitcoin community. And I'm not quite sure why peculiar has been used, because it makes it sound like tinfoil hat conspiracy theorist communities shunned by the local populace. Anyway, most recent of which is the suppression of withdrawals by two of the biggest exchanges within ecosystem due to regulation concerns. And obviously, guys, the Chinese government came out and were having problems because there was a huge amount of internal trades occurring through some of the Bitcoin exchanges in China. So much so that it was the equivalent, and obviously subscribers to my channel will fully understand this equation. It is exactly like the paper trading COMEX markets, where it is all represented by phony numbers in the transactions, where every 1,000 transactions that take place, only one of those would be using a real Bitcoin as backing. And that's effectively what was taking place. So in order to bring down these vast amounts of illegitimate transactions taking place with no real physical backing for, although there's not physical, no real digital backing in the form of real bitcoins being transacted. They swept in and ensured that for every transaction that took place, real bitcoins were trading. So that's basically the long and short of it. It goes on to say, players insist that there is a lot more to be seen within the space even as the year goes by. Bitcoin price trend remains upwards. Bitcoin investor and technical analyst Jonathan Milbit believes that there will be a significant upward pressure on the Bitcoin price in March 2017. His prediction is based on the perception of the public towards the resumption of Bitcoin withdrawals at the Chinese exchange and the ETF discussion. He says, quote, "Through the rest of 2017, we will see continued adoption, more mergers and acquisitions, and there is a consensus by most leading developers and Bitcoin technical analysts that the price will be between $2,000 and $3,000 at the end of 2017. And obviously, guys, if we also take Cliff High's Webbot into the equation, he is stating that we're going to be anticipating $2,300. But this is all Chinese numbers as well, because obviously that is how his linguistics structures come through. So moving on to this next article from BTC Times, March the 1st, 2017. Not sure if I said the date for the last one actually, guys, but it was published today. So btctimes.com, 1st of March 2017. Bitcoin price will be between $5,000 and $11,000 US dollars by 2020. Bobby Lee, co-founder and chief executive officer of famous Bitcoin exchange BTCC, tweeted a Bitcoin price prediction which is between $5,000 and $11,000 by 2020 after the block reward halving. And obviously, guys, that's something that occurs every set period, that the mining side of the Bitcoin industry reduces its rewards, and that actually plays a significant role, which we will get into later. The entrepreneur who often makes predictions additionally said that everyday inflow might scale consequently from the modern $2 million a day stage up to the $5 to $10 million a day. Bobby Lee reminded his 5,600 Twitter followers his medium-term price goal for Bitcoin is $5,600. There was not stated any words about how long it would take Bitcoin to attain that value. Moreover, he noted that $5 to $10 million everyday influx isn't much. He compared it to gold's inflow of $340 million per day. The Lee enthusiastic Bitcoin price prediction came after BTCC, one among the largest exchanges in China, suspended cryptocurrency withdrawals until March the 15th, 2017, in order to introduce new protection necessities and follow requests from the People's Bank of China, the PBOC. The three biggest and famous Bitcoin exchanges in China enforced a suspension of Bitcoin and other cryptocurrency withdrawals. Therefore, many investors turned to peer-to-peer market local Bitcoins, which is another trading platform. Local Bitcoins lately recorded an international all-time high as buying and selling volume in China surged in response to the exchange's choices. It's worth noting, local Bitcoins is blocked in China because it uses Google's reCAPTCHA system. So customers need to apply a VPN to get administration to the platform, which obviously, guys, is something called a virtual private network. It's I'm running one now. It's a program which changes your IP address and keeps you anonymous inside of the web, and also can block a lot of pop-ups and adverts and also malware trying to get through. In the past, the chief executive officer has addressed the future of Bitcoin in an effective way by urging the community to scale responsibly and to be patient, which obviously, guys, is something which is very important for the following reason. In order to focus on keeping Bitcoin as a reliable, vital, and steady asset, because that's what people want. They want that stability through the market, much like what gold has in comparison to fiat currencies over the long haul, because it rides out the inflation. And that is something that's been created through the Bitcoin implementation in the current day and age. It's going to be inflation beaten, and it's going to be massively profitable in terms of understanding this market early, acquiring a position, and seeing what the benefits will be in the future. And you will find out what I mean about that shortly as well. His upbeat attitude has not modified with time, as difficult times for Bitcoin in China never appear to have bothered him that much. He additionally sees low volatility of Bitcoin as a sign of maturity. Simply, unlike some different specialists, as Bitcoin wishes low volatility with a purpose to keep its increase and stability, which is basically what I was saying. So again, we're coming out with these ever increasing numbers, but these are from people who are inside of the industry and can see what is happening, what shapes are taking place, what institutions are developing, and what applications are being made for the ease of use through societies, and not to mention the adoption of technologies by the people and all the facilities that are offering day-to-day basic goods and accepting Bitcoins as payment. And that is the key thing. The more mainstream this becomes, and the more people are aware, and the more simpler it gets to set up, top up, and spend, the more mainstream and user-friendly it becomes, and the more adoption takes place. It's a whole exponential growth of events that unfolds. And to be honest, this is still a very early current stage, very fortunate stage. I mean, sure, it would be great if it was a few years ago and we were all understanding it then. I mean, some of you may be lucky enough to have gone through that era. A lot of people won't. But obviously, it was way more speculative back then. Whereas now, this is becoming more concrete. So with that said, let's see the latest event that is taking place inside of the market area. And obviously, guys, there are businesses and opportunities springing up all over the world. There are new concepts being funded, crowdfunded, or whatever popping up all over the world. So this article here from Bitcoinist.com, published today, Antonio Madeira, on March the 1st, Swiss-based serviced apartment company Vision Apartments has announced Bitcoin payment support for all of its apartment locations around the globe. So you're now seeing many different places you can use these Bitcoins. Once upon a time, there were very limited places. This is becoming widespread. You're becoming more and more able to live literally with nothing else other than having a Bitcoin wallet which is full of Bitcoins. That is what's going to be waiting for you over the next few years when everything becomes mainstream and adoption takes place through utilization of Bitcoins, because there are actually vast benefits to every single person using this network. And again, we'll cover that shortly as well. So there's not really much more I need to say inside of this article other than you can pay for your rental of apartment in full using Bitcoins. No longer do you need fiat currencies. So no longer do you need to convert a fiat currency when you go abroad. No longer will you be charged interest rates and foreign exchange rates when you make a purchase online for a hotel or whatever it is that you're booking. You can use the internationally traded format of Bitcoin with an exchange rate of something like 5 cents for a transaction, as opposed to the very high percentages we pay in the conversion rates. So that's just one benefit. So that's one benefit for the actual purchaser. So let's look at what is actually occurring on a bigger scale inside of a fiat dominated market. That's over on this next article here, which is from skift.com, published on January the 4th, 2017. And this is about Airbnb. Airbnb is becoming an even bigger threat to hotels, says new report. While the hotel industry has said Airbnb isn't a big threat, isn't as big a threat to the hotel business as some may think, it is. A new report from Morgan Stanley Research suggests otherwise. The report called "Who Will Airbnb Hurt More? Hotels or OTAs?", which stands for online tourist agencies, like Agoda and Hotels.com and all those sort of things. 1 year later, used survey data collected from more than 4,000 customers in the US, UK, France and Germany to demonstrate the competitive threat of Airbnb to both hotels and online travel agencies, OTAs. That threat, says Morgan Stanley Research, is greatest for hotels because Airbnb usage has increased more than we thought it would, and cannibalization of traditional hotels has been higher. A very interesting word, cannibalization, which means it is eaten its way into the market. Airbnb is eating its way through the hotel market. Now approximately 18% of travelers, with demand increasing, coming from hotels. Now approximately 18% of travelers, with demand increasing, coming from hotels. He added, while still small, we believe Airbnb has been almost double the threat to hotels in 2016 than previously believed. And the threat is growing. Airbnb, which is now valued at more than $30 billion based on money raised. So down here, guys, is like there's a chart between 2015 in blue, 2016, and then up to 2017. So it's now saying of the travelers that were surveyed, the light blue ones here are pretty much representing 49% of people said they stayed in an Airbnb accommodation in 2016. And they go on to say that this number will remain steady throughout 2017, and Airbnb's cannibalization, there it is again, of hotel business will hover at approximately 50% for both business and leisure travelers. And that's basically down to the principle, guys, that not only are the Airbnb places generally a little bit cheaper than the traditional hotel room, you also get the facilities of a home, not just a room. So that is why it is cannibalizing the hotel industry. And I don't go on to read anything else there, guys. And that leads us over to this next article, guys. Published on the 15th of February 2017. Lee Gallagher from Fortune.com. Airbnb's profits to top $3 billion by 2020. Which again, ironically, if we go back to the Bitcoin scenario, is the next halving that takes place in 2020. Airbnb is projected it will earn, before interest and taxes and all the other stuff, as much as $3.5 billion a year by 2020, according to sources close to the company. So guys, this is a $3 billion per year income that is being generated purely from 50% and growing of the hotel market cannibalization that is taking place around the world. So now you just have to cross-reference these sheer numbers back into what will happen when the Bitcoin market start cannibalizing Airbnb's fiat market. Will Bitcoin take 50% of Airbnb's? Because then you just have to go down into how many people use Airbnb of a certain demographic and are actually aware of what Bitcoin is. And then when they learn of the attraction of what Bitcoin can do by using it as a checkout purchase, it far supersedes any fiat currency checkout process. So it's food for thought. Not to mention, imagine all the transactions that are taking place on current fiat system cards and all the costs incurred, as stated earlier. Now, if we flip back to the original article here, Swiss-based service apartment company Vision Apartments has announced Bitcoin payment support for all its apartment locations around the globe. So something which is obviously going to be extremely beneficial for people with Bitcoins is the extremely easy ability to send Bitcoins from point A to point B for next to nothing in cost. And something else to bear in mind is if Bitcoin rises in value, which it is doing, and the fiat currencies are constantly battling with apartments becoming more and more expensive, which is something that you will physically see via the currency war situation. And it makes perfect sense that you can use Bitcoins tax-free to purchase rental accommodations wherever it is you may be staying around the world. And really there's no real need to declare that you've made any potential gains through the Bitcoin growth over these next few years. As stated again, Bitcoin price between 2,000 to 3,000 by the year's end, and then rising to 5,000 to 11,000 by 2020. Well, currently guys, Bitcoin is only 1,200. So let's just call it as it is. You're going to be looking at a 500% gain, which actually gives you the ability to spend that vast amount of profit, growth, however you want to perceive it, tax-free effectively, when more and more people adopt different platforms that you can utilize that ability through. And it comes down to, well, what would you rather do? Would you rather leave fiat form inside of a banking institution? Would you rather lock it away inside of a vault in physical metal form? Or would you rather hold on to cash and spend cash everywhere you go? If you can't see the sway and swing that is taking place, and as I've just labelled with multiple backed up evidence, why it is more than just a speculative investment, but obviously your own due diligence will be required. I'd say that's a pretty strong foundation to be more than just interested in, and to actually develop that interest into fully understanding the vast impacts that are going to be hitting the world with mass adoption and mainstream adoption of what is Bitcoin. It's that simple. So it takes me over to this next site called blockchain.info, sent over to me by a subscriber. Fantastic site. And different formats that we can select. But if we look at here, we're going to go for a 2-year vision of what's been occurring. And this is blockchain Bitcoin wallets that have been created. So 2 years ago, it was in the 3 million account range. And today we're up at 12.25 million. Now, obviously, somebody's going to make the comment, yeah, but a lot of those accounts are redundant, they're not used, passwords are forgotten. Yeah, that's fine, but it's not going to be a 1 in 4 forgotten. The point is, the growth rate in between the last 2 years of accounts being created has increased 400%. Knock off 100% for idiots losing accounts and passwords forgotten and everything like that, and computers corrupted or whatever the situation might be. 300% growth. That shows you a mass adoption taking place inside of the market. And we'll just head over to this article here, which we were talking about the halving briefly earlier. So I'll introduce you to what exactly, if you're not aware, a halving actually means. So the blockchain has periodic stages where it reduces the rewards for miners who actually get paid for sustaining the system, making transactions and blocks, which is all the technical stuff you don't really need to understand because it's being dealt with and it's being handled by big institutions, big money players inside of the market. Anyway, So the first halving took place in November the 28th, 2012. So on this chart here, this is the representation of creations of Bitcoins and the circulations. And again, a lot of these Bitcoins at the early stages will have been lost, again, accounts forgotten, passwords forgotten, etc., etc. So the bit that I'm pointing out is, if you see this, the growth of the Bitcoin creation, bear in mind technology was and mining abilities were quite simple in the early stages. You didn't need high levels of sophisticated equipment. You could generally mine on the everyday type laptop computer or tower computer, and you would be able to generate Bitcoins fairly easy because of the mathematical algorithms that were being broken were simpler. Things got more complicated and the chains got harder for the computer databases to generate the Bitcoins effectively. So a couple of years passed and money was invested and a lot of people started gaining inside of this arena and were mining. So a lot of mining took place up until the first halving happened, which was here, 28th of November 2012. And if you can see that marker at 10.5 million Bitcoins were created, bear in mind the total maximum production amount is 21 million. That's half of the Bitcoins already created, and a large portion of those are gone forever. As to the exact number, obviously nobody knows. Now what I'm trying to picture for you to actually see is from this point here where the line takes a small little break, and from this point back down over here, you can see the actual angle on the chart is higher than this next angle, okay? And at this next point here, we go over to this next article, which is Bitcoin halving in 2016, where the block reward, which was set at 25, drops down to 12.5 Bitcoins. So that occurred in July of 2016, which is right up over here at the 15.5 million Bitcoin area. So bear in mind, there's only 5.5 million Bitcoins left to mine from that date. So already 3/4 of the Bitcoins have already been created. So, and it's only 2016, bear in mind. We're now in 2017. And that is why you can see the angle from that point to that point is more flatter than the angle from this point. And you can start to see the drop again in the angle that we are now currently in. Which, if you can picture this on, imagine if we went forward into 2025 or something like that, and this angle would actually arch and it would become flat. That's the flow of what is going to happen inside of this sector. As long as the Bitcoins stay at the 21 million threshold, maximum mined amount, which is something which actually can be altered. But obviously that can only be done via everybody inside of the community, everybody that holds Bitcoins, all the miners, and everybody agrees, which obviously isn't going to happen because people understand that this is a finite supply. And that's the whole thing about the investment of these early stage people, and especially the ones that can see this curvature taking place. And when the drop off occurs, which is going to drop off and become level, then major things start happening to the price mechanisms. So if we take a look here at the blockchain size, which is the transaction rates and data inside of the entire system, it's beginning to get into the form of a hockey stick. Obviously exponential growth, kind of like the US debt ceiling that is getting ever and ever created, higher and higher and higher. It's going to be the same for the amount of data inside of the blockchains due to the transactions taking place that are increasing with more and more wallets, more and more speculative investors, and more people using transactions for everyday life. Booking an apartment, as stated earlier, through one of these platforms, buying a coffee, paying for your shopping, paying for your electricity, paying for your phone, paying for your water bills. paying for your traveling expenses, and on it goes. So the transactions inside the blockchains are going to just take off. And this leads us into what is happening inside of the market capitalization. And again, this is on a 2-year scale. So back down over here, beginning of March 2015, the market capitalization has been valued at 3.6 billion US dollars. And as of today, it's almost 9.25 billion in 2 years. I will just flip back and show you the longer term scale one here, which obviously the creation of the Bitcoin was at the beginning of 2009, somewhere down here. 2010 it started getting introduced. Now obviously a huge rally spike, totally unsustainable, market collapses, and then there's realization that takes place of people that were just getting in because they didn't even know what they were getting into. It's just the hyperball market that typical people don't understand what is occurring. And obviously anything like that is great if you're at the beginning stage and you sell up here, but if you buy it anywhere through here, you don't even want to see Bitcoin again. You're just getting ripped apart. So what's happened inside of this whole phase here is development, realization. How do we improve the system? How do we make it more steady, stable? But as I've said in my previous video, there's always going to be elements of pump and dumps that take place, because that's just the nature of what this is, because it's such a speculative type asset class that investors can make reasonable returns through. But what is occurring through here is the constant upward trend, which it has consolidation periods, it has its uncertainties inside of the market, but yet for the last 2 years it has done nothing but have an exponential growth. And that's not only because it's in a bull market, it's because of its world adoption and world education that is taking place. More and more people understand this. They can see what's happening, and they don't like what is happening to their fiat currencies. So something else that I'm going to point out to you, backing up the statement of 2,000 to 3,000 US dollars per Bitcoin by the end of the year, and again 2020, 5,000 to 11,000. And it's really quite simple when we take it down to the technical chart analysis. And as I always point this out, this is the strongest formation of chart pattern that you can have, which you will see by me introducing various images through the screen now and blending them, that you can see exactly what is occurring through this market. And if we again take Cliff High's Webbot forecasts that this Bitcoin valuation currently is going to be heading up to around the 1488 area, because it's going to hit a bit of a bull market. It's going to retrace through the cup handle down a couple of $100, maybe $400, $500, who really knows. But that's all part of the retracement phase and the sellout phase of profit taken, again, which kind of happened during the January situation and obviously early February. But that's going to be followed by what the other analysts and experts are predicting, which is the rally, as well as what the Webbot is forecasting, back up into the 2,000 US dollar range, which is way up over here. And then by that time, guys, this thing is going to become so stable inside of its market, it's going to be way past the valuation of gold, if gold is going to be suppressed as it currently is during this phase. Gold will only snap out of that manipulated valuation once the current system changes, and that's obviously going to take time for that to erode and break down. All the while you can be utilizing this fantastic opportunity inside of the Bitcoin markets. And we can see here what's actually happening during miner revenues, and again the 2-year span, and this is what miners are earning. But what I find quite interesting is you see this stage here, which is during the halving stage that took place. So in July, the miners were doing pretty well, and all of a sudden the halving occurred, while they had overhead costs of, electricity, materials, computer equipment, all that sort of thing that is required to make these Bitcoins available for consumer spending effectively. And obviously their bottom lines dropped right out pretty severely because obviously overnight they lost half of their revenues for the same outlay. But what actually occurred, quite interestingly, is time and time again it will retrace itself back out because of the rise in value that is occurring through the Bitcoin. So although at each halving miners will anticipate a price drop, with the forward analysis and expectations that it is going to be a rise in market due to the less available supply only has one effect on price, as well as the added millions of extra people joining this industry every year and what that does to drive the physical price. And we'll take a quick look on a longer scale term, and we can see obviously during the $1,000 spike when it was trading at its previous all-time high, that was obviously extremely lucrative for the mining industry. Why? Well, because the technology and equipment required to mine during the earlier stages was cheaper, because they were able to acquire more Bitcoins per equipment, because the calculations required were not so difficult as they are today. But nonetheless, if we look at the trading range between the last 2 years, the overall constant range is going to be somewhere around the one and a quarter million US dollars. But that is obviously going to increase when Bitcoin takes off again, much like it did back here. So then it becomes a lot more profitable again for the Bitcoin miners. And again, you're going to also see that cup and handle happening inside of here, which again will have its retracement for the handle, followed by another when 2020 starts to take place, because that's when Bobby Lee is expecting it to go from 5 to 11,000 US dollars. So from obviously technical chart visuals, everything is pointing in a very positive formation for what Bitcoin is going to be doing. And if we head over to here, this site is called blockchainblockhalf.com. It tells us the countdown for the next halving, which the reward drop ETA date is set around the 26th of June 2020. So that is when the Bitcoin block mining reward halves from 12 coins down to 6 coins. And what's nice about this website is it actually gives you now the percentage of total Bitcoins mined. And bear in mind, most people have heard of Bitcoin, but have no idea about what exactly the importance of it is. Yet 77.1% have been mined, leaving only 22.9% remaining over the next 100 years of mining. So the actual available supply is not very much. New mining is going to be on a dwindling supply, which means the only available stock is what is going to be circulating, which of the 16 million that have been produced, a large percentage, maybe 3 million of those may have been lost forever. I mean, that's a stab in the dark. I could be wrong, could be right, who knows. But nonetheless, a load has been lost. So yeah, the next halving is taking place on June the 26th, 2020, which we revert back to the Bitcoins in circulation. When we get to 2020, which is only 3 years, not far off anyway, and that is going to put a real strain inside of the available Bitcoins, because a lot of people will actually see this market and what the value of these Bitcoins are going to be 5 years down the line, 10 years down the line. So they are actually purchasing now, holding them, and they won't be spending them. They won't be spending them. It'll be these large companies that are going to be pocketing and saving these Bitcoins for the future. So you will be spending them thinking that you're making good gains by saving on taxes and whatever other charges. But you have to understand that once these Bitcoins go into the corporations and the industries and remove them from the everyday people, the chances are vast amounts of these Bitcoins are going to be locked away for quite some time, which again has what impact on the price of Bitcoin? Again, it makes it take off, because then more and more people are wanting to buy into it because they see the entire hockey stick taking place. And by hockey stick, guys, it's a technical term for taking off to the moon. And if you can't see that, then you're never going to see it. But if you see it, then you understand why you need to understand this and get into this and enjoy this. Thank you so much for watching this video, guys, and please do leave your comments. Please do support the channel if you found this informative. There's multiple options through the description bar. I'd really appreciate any help that you may be able to provide, and I look forward to seeing you on the next video. Take care.